Hello everyone, this is Siam from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important pairs and their price movement predictions for the day, which falls on a Tuesday, 28th of September 2021. Let's begin with the US dollar versus the Japanese yen, where in the previous videos we said that it is moving in a sideways movement in the daily time frame between level 109.10, which resembles the lower boundary of the sideways movement, and 110.70, which resembles the upper boundary of the sideways movement. Recently, the pair broke upwards to level 110.70, which, by doing so, started an uptrend in the daily time frame, which is currently targeting around level 111.65 and will continue to target level 112.40 as primary targets in the current uptrend. If we notice the RSI indicator in the daily time frame, then we can see that by moving around level 70 near the overbought area, it supports the probability of rebounding down off of around the current levels in order to correct, which might extend to retest level 110.70 before rebounding upwards off of it and continuing the uptrend, specifically since it was a strong horizontal resistance level previously and is currently expected to be a strong horizontal support level for the pair in the daily time frame. If we notice the 1 hour time frame, then we can see that it is moving in an uptrend and has formed an upwards channel where it is currently starting to rebound downwards off of the upper boundary of it, which supports the probability of a downwards correctional movement that will be confirmed upon the breaking downwards to the lower boundary of the upwards channel, and in that case, the pair will extend to retest level 110.70 before rebounding upwards off of it to continue with the uptrend like we said. If we notice the RSI indicator in the 1 hour time frame, then we can see that it rebounded downwards off of around level 70 from inside the overbought area, which supports the probability of rebounding down off of around the current levels in order to correct before continuing with the uptrend. That was it for the US dollar versus the Japanese yen. Let's move on to the euro versus the Japanese yen. In the previous videos we said that it is moving in a downtrend in the daily time frame, and recently we can see that it failed to break down through level 127.90, and due to that it started a sideways correctional movement in the daily time frame and is currently targeting around level 130.75, which is a horizontal resistance level for the pair in the daily time frame, and by rebounding downwards off of it will support the continuity of the current sideways movement, which will then extend to target around level 129.55, then 127.90 as primary targets in the sideways movement. On the other hand, if the pair breaks upwards to level 130.75, then it will be starting an uptrend in the daily time frame, which will continue to target around level 132.50, then 134.10 as primary targets in the expected uptrend. If we notice the 4 hour time frame, then we can see that the pair broke upwards to level 129.60, which supports the continuity of the current upwards movement in the 4 hour time frame as well as the daily time frame, and will continue to target around level 130.75. If we notice the RSI indicator in the 4 hour time frame, then we can see that it is currently moving around level 70 near the overbought area, which supports the probability of rebounding down off of around the current levels in order to continue with the overall sideways movement in the daily time frame. That was it for the euro versus the Japanese yen. Let's move on to the New Zealand dollar versus the US dollar. In the previous videos we said that the pair is moving in a downtrend in the daily time frame, and recently we can see that after rebounding upwards off of around level 0.68, the pair continued to break upwards to the previous peak, which therefore ended the previous downtrend, and it is currently moving in a downwards correctional movement, where if we look closely we can see that it has formed a bullish engulfing pattern, and by holding above the low of the bullish engulfing candle, it will support the probability of rebounding upwards off of around the current levels in order to continue with the upwards movement. However, this upwards movement will only be confirmed upon the rebounding upwards off of around the current levels as well as the breaking upwards to level 0.7170, which by breaking upwards to it will form a new uptrend in the daily time frame and will continue to target around level 0.7315. If we notice the RSI indicator in the daily time frame, then we can see that by moving around level 40, it supports the probability of rebounding upwards off of around the current levels in order to continue with the upwards movement. If we move over to the 4 hour time frame, then we can see that it is currently moving in a downtrend and it is trading around level 0.6980, which by rebounding upwards off of it will support the bullish scenario that we spoke about, and by breaking down through it will support the continuity of the downtrend as well as the targeting of around level 0.6930, then 0.6880 as primary targets in the downtrend. If we notice the RSI indicator in the 4-hour time frame, then we can see that by moving around level 40, it supports the probability of rebounding upwards off of around the current levels. That was it for the New Zealand dollar versus the US dollar. Market Equity wishes you successful trading and have a nice day.